Hims&Hers is a company that's just on fire right now. But what's really going on behind those huge growth numbers? Well, today we're going to dig into their latest financials, specifically from the CFO's perspective, to get the inside story.
Okay, so let's just jump right in. The headline number here is wow. It's massive. They just blew past another quarter, pulling in nearly $600 million in revenue. And get this, that's a 49% jump from last year. We're not just talking growth here, this is some serious acceleration.
So what's really driving all this? Here's what we're going to cover. We'll start with a snapshot of their success, then look at the two very different stories of the Hims and Hers brands. After that, we'll dive into their investment blueprint, a big shift in their strategy, and finally, what they see coming down the road.
All right, let's kick things off with a closer look at Q3's performance, because, it's about way more than just that one big revenue number.
So yeah, the top-line revenue growth was fantastic. But here's the kicker. They're getting more profitable too. Their adjusted profit, what the finance folks call EBITDA, grew over 50% to $78 million. That's a huge deal. It tells you they're not just growing for the sake of growing, they're actually getting smarter and more efficient as they get bigger.
So what's behind it all? It's the subscribers. The platform brought in over 30,000 new subscribers in just 3 months. That's nuts. It pushes their subscriber growth to a really solid 20% year over year, which is exactly what you want to see for that sticky, recurring revenue.
Okay, but it wasn't all sunshine and rainbows. And this is where things get interesting, right? You've got this kind of financial push and pull going on. The CFO was really clear about some headwinds, things like gross margins taking a bit of a hit and tech spending going up. But, and this is a big but, they had these huge tailwinds pushing them forward. They got way more bang for their buck on marketing, and they got much better at keeping the customers they already have. That's a winning combo.
And that brings us to a really crucial point. This isn't just one growth story. To really get what's going on, you have to split the company in two and look at the Hims brand and the Hers brand. They're on completely different tracks right now.
So here's the deal, and the CFO laid it out perfectly. It's like a tale of two brands. Hims is, well, it's in transition. They're moving to more personalized daily solutions, and that's causing a temporary slowdown. But the Hers brand? Oh man, it is on an absolute tear. We're talking nearly triple-digit growth as it just explodes into new areas like menopause.
And this momentum is just incredible. The Hers brand is on a trajectory to become a billion-dollar business all by itself by 2026. Think about that for a second. That's not just a brand, that's a behemoth in the making. It's a massive part of their whole future. So, they're making all this money. What are they doing with it? Where are they putting it to keep this growth machine humming? Well, the CFO gave us a really clear 5-point investment plan. This is basically their blueprint for what's next.
And let me tell you, they are not thinking small. They're talking about more than doubling their physical facilities, rolling out a bunch of new specialty services, hunting for partnerships in M&A, dumping cash into their tech, and making a big push to go international, starting with Canada.
But why all this spending, right? What's the end game? The CFO made it crystal clear. Every single one of these big bets has one goal: to generate a ton of sustainable free cash flow down the line. It's all about playing the long game.
Okay, so moving beyond just the dollars and cents, the CFO talked about something even bigger, a fundamental shift in the company's whole reason for being. This isn't just about a new product line, it's a completely new way of thinking.
They're moving away from what you could call a reactive model, where you wait for a problem and then treat it. Instead, they're going all in on what they call proactive health management. The whole idea is to use diagnostics and other tools to help you manage your health before you even get sick. It's about prevention, not just treatment.
And that is a huge, huge shift. So you got to ask, what does that actually mean for the business? How does that change? Well, everything.
From the CFO's seat, this is a total game changer. They think it's going to pull in a whole new type of customer, people who aren't sick but who want to optimize their health. At the same time, it makes their relationship with current subscribers even stickier. It turns them into a much more powerful, data-driven platform for the future.
All right, so let's talk about the future. What are they telling Wall Street to expect? Here's the official guidance straight from the CFO. They're still projecting really strong growth. They're guiding for over $600 million in revenue for Q4 alone. And for the whole year, they're looking at landing somewhere north of $2.3 billion. But, and this is important, they're also flagging some bumps in the road ahead.
And this is the thing you really need to hear. The CFO was super upfront about this. All those big investments we talked about, they're going to cause what they call a temporary pause in how much profit margin they make. So they're consciously choosing to spend big now,
betting on a huge payoff down the road.
But even with that short-term hit, leadership isn't backing down, not one bit. The CFO made a point to say that their conviction is as high as ever. They're all in on their strategy and those really ambitious targets they've set for 2030.
And that conviction is all built around one massive number. Their goal, the whole reason for all this investment, is to hit an incredible $6.5 billion in revenue by 2030. That's the North Star. That's the prize.
So there you have it. The CFO has laid out this incredibly clear, incredibly ambitious plan. They're spending a ton of money now to build for a much, much bigger future. And it all boils down to one simple but massive question. Can they actually pull it off? Can they execute on this complex blueprint and become the global health powerhouse they want to be?